Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome back after the nice holiday. Well, yesterday euro currency has given us a trick, shown some price action to the upside, and that a bit changed our assumption about the potential Brent body buy. Why? First of all, let's take a look at the picture that we have discussed previously. It's thrust to the upside. It's minimum required number of bars. We have closed below this green line. That is the 3x3 displaced moving average. Here was the first close. That was the second. If we pretend on the Brent body trade, we need that market reaches some significant support area within 3 bars below this green line. That's necessary condition for the Brent body trade. Here we have the accomplishment only the first condition, that market has closed below the 3x3, but we didn't get the second one. This market hasn't reached any significant support area. It hasn't even reached the 3/8 support, it's 131.40 area approximately, of this thrust to the upside. That could lead to either double repo sell pattern or to its failure. Speaking otherwise, just for continuation to the upside. If it will be the double repo sell pattern, then I prefer to see, as you know, the second top that is greater than the first one. And we have chances to get this. Take a look at the second chart of the daily time frame. That's now not the moving average, that is Napoli MACD predictor indicator. And you here see what we have. Nice pattern. That is bullish stop grabber. As you can see, yesterday market was trying to shift trend to the bearish side with this attempt to close below this MACD indicator, but has failed and closed above it. Usually this leads, as you know, at minimum to taking out of the previous highs. It's right here. Also, that is the stop grabber that I prefer to see, because it gives the signal in the direction of the thrust. So we have from the one side we have the pattern, from the another one we have the momentum of the market, the impulse of the market. So we could surplus them, and that's why I prefer to see stop grabbers in the direction of the previous thrust than against it. Now we see that some sort of this price action could repeat within the current trading session. You can see market also is forming some sort of the candle that at least currently looks as then another one stop grabber. That is also very often happens when market, so you could say, finds support on the MACD predictor line. It could form some stop grabber side by side. That is also very often happens on the market. So if we suggest that this pattern will work, then we could pretend at minimum at the taking out of these highs, and that pattern doesn't contradict with the potential double repo sell pattern on the hourly time or on the daily time frame as well. So if market will taking out these highs, it could either continue move to the upside or returns right back, taking out just stops that has been placed above this area and returns right back. So that could be the nice pattern, nice looking double repo pattern. That is two possible scenarios that both of them are point on the potential move to the upside. Another significant moment, as I said, is that we didn't get the Brent body pattern. So market hasn't even reached the significant support area. That's why we could say the Brent body has been cancelled, and if market doesn't want to continue move to the nearest support, then probably it should continue the move in the other way. Now, we will take a look a bit different on current chart. So we will start from the hourly time frame, and later we will shift to the 4-hour time frame, because that is will be more useful for current explanation. So that is the attempt to use the stop grabber as the pattern. So if you have the bullish view on the market and suppose that market will continue move to the upside, that's the possible solution to enter the trade. That is the minimum of the yesterday's trading session. That's the minimum of the stop grabber pattern. That is the failure point and validation point of this pattern. But I used the few levels from that area, from this low to this high. As you can see, the trade is, I suppose, not in play now, since it has been erased by this price action. So market has reached almost the 50% support of that move. The next support level is right here, 132.05. That is the 618 support, almost from this stop grabber swing. It's a bit lower reaction point. So around 132, 132.10 area is the area of support. That could be also with this bit goofy looking ABCD pattern. It could be some sort of the agreement. So that's the level to watch for, is the potential enter on the long side of the market, if you would like to use the stop grabber as the potential pattern to trade. But before you will put the trigger, I would like to show you another picture, how it also could turn. That is another hourly time frame. That is our previously discussed picture. If you recall that previously we have discussed this small ABCD pattern that could be formed right here. So if you will take a look at this price action, it's not very nice looking from the perspective of the trend development. That's in fact, to be honest, the moment that a bit doubt me a bit. So I prefer to see some really thrusting move to join with and be sure that market is really accelerating in one direction. So although we have we expect now potential move to the upside, this price action looks a bit heavy. It's choppy and sloppy price action with a lot of pullbacks. It's not very stable. It more looks like a retracement. And in fact, we could say that overall price action in the recent days, I understand that could be due to the holidays, but in fact this is price action looks like a retracement. But that also could be the development to the downside. First of all, we have this ABCD pattern, it's 1618 extension is around 131. That could be a bit compounded ABCD, so where we have the BC leg as the smaller ABCD pattern, some sort of the guard is triple to sell. That could lead to the greater ABCD pattern to the downside. That's our risk. From the risk for the bullish perspective. So if you're bearish, then that's potential your scenario to the downside. If we suggest that stop grabber will work and we will have potentially the acceleration to the upside, we could get this pattern. That is the 4-hour time frame. That's why I would like to show you it as the last chart, because it have very significant moment. If we will get some sort of the 600 retracement on the hourly time frame with some small move to the downside and then move to the upside, we could get this nice looking butterfly. Take a look at the significant moment that 127 extension of this butterfly stands precisely, and the 618 extension of the great ABCD pattern on the weekly time frame is 133.50 area, as well as some pattern on the daily time frame. Just a minute of that pattern, A, B, C bottom. The 100%, as we recall that we have discussed this one, that market hasn't quite reached this area. By the 40 pips, market hasn't reached this target of this ABCD, and I said that's very untypical to drop some significant target below the market and continue move to the downside. That is the potential hint on the intention of the market to complete it by this further upward acceleration, short-term acceleration. What will be next? It's very difficult to predict, but that is also the points in favor of the bulls. That could be the butterfly sell. If this will be the butterfly sell, this is we have discussed this also. It's very often the double repo patterns takes the shape of the butterflies. That's very just a gold mine for the traders, since it could enter on the double repo pattern right at the top, not to wait the confirmation, but entering right at the top when at the reversal point of the butterfly. If it will come true, then we will definitely try to use this possibility. But that is what about the bullish scenario. So what we could to do in current environment? From the one moment we have very doubtful price action to the upside that would not look like the acceleration and the taking out of these highs. It's very choppy and sloppy price action on the hourly time frame. You could see this. That is our risk of potential move to the downside. Well, that is the failure point of the butterflies, 131.58 area. Okay. The invalidation point for the stop grabber is its lower right here. It's around 131.82. Then here I do not find any 100% solution for this current situation. Probably we will have to take the risk of the loss if we will take the bullish side on the current trade. But I still think currently that now signs for the bullish signs are stronger than the possibility of downward continuation. This is the moment that market doesn't want to act as the brand body, do not want to continue move to the trade support. That is the stop grabber on the daily time frame. That is potential butterfly on the daily time frame. When the market gravitates to the weekly target, to the significant ABCD pattern target on the daily time frame. That is also bull trend on the 4-hour time frame that has been reestablished. So I think that probably I gravitate to the bullish side more than to the bearish. And that potential compounding ABCD and Gartley's 222 pattern is in fact our risk. Well, that's why I prefer to use some a bit deeper level of support to join this potential move to the upside, because this will just save my money. Save the assets, since you will enter at lower levels, risk will be not very significant. Well, that's all that I could tell you currently, because it's very difficult to predict how market will behave in this area. So if I will see some sort of the candle but to the downside, probably I will hold my horses and will not enter on the long side of the market. I will take a look at the further development. Well, that will be the great challenge for bearish development if we will see some sort of strong acceleration to the downside, because hardly the butterfly pattern will survive if we will see such development on the bearish side of the market. If it will be the price action, something like that, then probably that will be our chance to enter on the long side. So keep an eye on this current price action. It's very significant and interesting, especially because if we will be right and market in fact will show the acceleration to the 133.50 area that I would like to see and hope that it will happen, that will give us another great possibility to enter on the short side of the market based on the 4-hour chart butterfly sell pattern.